Hey, what's going on, everyone? Welcome back to Stock Edge Analytics. Today, we're doing something a little different. We're looking at Google's secret stock portfolio. Yeah, you heard that right. Google is so massive now, they're literally investing in other public companies. We're talking over $2.5 billion across 29 different stocks. And today, I'm going to walk you through 5 of their biggest bets. We'll talk about the price, the profits, the risks, and I'll rank them from best to worst based on my opinion. Let's get into it. All right, stock number 1. This is AST SpaceMobile. Ticker is ASTS. Now, Google owns about $650 million of this stock. Think about that for a second. That's over 25% of their entire portfolio. So, yeah, they're pretty bullish here. Current price, $71.88, down about 7% today. So what does this company actually do? You know how SpaceX has Starlink for internet? Well, AST is doing something similar, but for your cell phone. Imagine you're hiking in the mountains, or sailing across the ocean, or you're in the middle of nowhere with zero signal. With AST's network, you'd still have service. No special hardware needed, just your regular phone. The real opportunity here is in developing countries that don't have cell towers everywhere. Huge market. Now, let's look at the numbers. Last quarter, they did $54 million in revenue. That's up 3,600% from last year. Crazy, right? But here's the problem. They also lost $74 million. Just last quarter. And the valuation? This is where it gets wild. The price-to-sales ratio is 398 times. That's one of the most expensive stocks on the planet. Look, I get the potential. The partnerships with Verizon, AT&T, Vodafone are solid. But at these prices, I'd wait for a pullback. I'm ranking this one at number 4. Stock number 2, Figma. Ticker FIG. Now this is interesting because Google only owns about $11 million here. Small position. But personally, I'm way more excited about this one than the last. Current price, $17.17. And get this, the stock is down over 85% from its IPO high, and it IPO'd less than a year ago. So what's Figma? You might have actually used their software. It's a cloud-based design platform. Super popular with designers, but also with big companies. In fact, 95% of all Fortune 500 companies use Figma. Let that sink in. Financially? Last quarter, they did $303 million in revenue, up 40% year over year. Gross margins? Almost 90%. That's insane for a software company. The bad news, they're still losing money. $226 million loss last quarter. A lot of that is stock-based compensation. But here's why I like it. They're leaning hard into AI. You can literally type a text prompt, and Figma builds you a full app layout in seconds. For long-term investors, this looks like a heck of a rebound play. I'm ranking Figma at number 2. All right, stock number 3, Planet Labs. Ticker PL. Google owns over $600 million of this one, another 25% of their portfolio. And yeah, it's another space stock. Current price, $35.03. Now, Planet Labs is different from AST. They're not doing phone service. They do satellite imaging. Their fleet captures daily images of the entire planet Earth, every single day. And they sell those images to everyone. Defense contractors, farmers, insurance companies, energy firms, even governments. Last fiscal year, they hit record sales, over $300 million. And for the first time ever, positive free cash flow. That's huge. They also have a $900 million backlog. That's up 80% from last year. Oh, and one more thing. They just announced partnerships with NVIDIA and Google to build data centers in space. Yeah, you heard that right. The stock is up nearly 1,000% in the past year. So it's not cheap, but the financials look better than AST. Losses are narrowing every quarter. I'm putting Planet Labs at number 3. Stock number 4, ARM Holdings, ticker ARM. Google owns about $200 million of this, around 8% of their portfolio. Now, this is a very different kind of company. Way less speculative than the space place. Current price, $198.65. ARM designs the most popular chip architecture in the world. Period. 99% of all smartphone processors are built on ARM. Think about that. Every iPhone, every Android, every smartwatch. They collect royalties on every single chip sold. Over 350 billion devices so far. Now here's the exciting part. Just last month, ARM announced their first ever in-house chip. They're calling it the AGI CPU, designed specifically for AI data centers. The CEO says this single chip could generate $15 billion in revenue by 2031, and they already have customers lined up. Meta, OpenAI, Cloudflare, SAP. Last year, ARM did about $4 billion in total sales. So if that chip hits its targets, we're talking multiple times larger. The only problem? Valuation. The stock is up 200% since IPO. PE ratio is 263 times. Look, if we're just talking about business quality, ARM is number 1, hands down. But at today's prices, I'd rather buy Figma. So I'm putting ARM at number 2, tied with Figma. But honestly, you could swap them depending on your risk tolerance. All right, last one. Stock number 5, Tempus AI, ticker TEM. Google owns about $100 million of this, around 3.5% of their portfolio. Current price, $51.67, down about 60% from its high. Now this one is totally different from everything else we've covered. It's a mix of healthcare and artificial intelligence. Tempus uses AI to analyze massive amounts of clinical data. We're talking over 450 petabytes. That's an insane amount of data. And they use that data to help doctors provide personalized medicine. In the short term, they act as an AI assistant for doctors, already being used by more than half of all academic medical centers, half of all oncologists, over 5,000 providers across the country. In the long term, they want to use all that data to actually cure diseases. Imagine finding a cancer treatment based on someone's specific DNA. That's years away, obviously. But the potential is massive. Financially, revenue growth over 80% last year. And here's the big news. Adjusted EBITDA turned positive for the first time. They're still losing money on a GOIP basis, but they're moving in the right direction. Big-name investors like Cathie Wood and Nancy Pelosi have been buying this one too. That said, I already own several biotechs in my portfolio, so if I had to choose, I'd probably take one of the space plays instead. I'm ranking Tempus at number 5. Let me quickly recap the rankings. Number 5, Tempus AI. Number 4, AST SpaceMobile. Number 3, Planet Labs. And tied at number 2, Figma and ARM Holdings. No clear number 1 for me right now. ARM has the best business. Figma has the best value after the crash. Here's the bottom line. Google can afford to bet on risky, speculative companies. If any of these go to zero, Google barely feels it. But for us, retail investors, losing money hurts a lot more. So be careful with these. Do your own research. Don't just buy something because Google owns it. That said, if you're looking for high-risk, high-reward plays, these are definitely interesting. Drop a comment below. Let me know which one you'd buy, or if you think I got the rankings wrong. Appreciate you watching. This is Stock Edge Analytics. Take care, and I'll see you in the next one.